Hi, this is Dustin with Dustin's Dollars, and today we are going to be going over Knightscope's 2021 Q3 earnings that were just released today. A couple hours ago, I've read through it mostly, and I'm going to walk through what I think are the important points today, give you my opinions. Um, Before I get into this for real, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I may own investments I own an investment in Knightscope. I have a long position. So basically, this should be for your entertainment purposes only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So that being said, Knightscope did release their 10Q today for the quarter ended September 30th, 2021. I do not believe there was an accompanying press release, so I'm not sure if everybody saw this if they're not subscribed to the actual SEC filings, as I am. So today I wanted to go through this and talk about what I like, what I didn't like, and what this sort of means for the company. So first up on everybody's mind is, of course, growth, and right here I'm looking at their growth in terms of machines and network, and hopefully you can read this. I tried to make it big enough. As of September 30th, 2021, our client base was 30 clients and we had 52 machines in network. So that is obviously disappointing. That's almost no growth compared to June 30th, which was the period 3 months prior. You can see I have one essay up there, the semi-annual report filing there. At that point, they had 34 clients and 51 machines in network. So they had technically one additional machine in network over those 3 months, which is obviously disappointing, I think, for anyone who views this as a startup and wants to see some growth. And they also increased their client concentration risk in the sense that now they have more machines actually from less clients. So that is a little bit disappointing. However, there's a silver lining here, and that is that they did actually make sales. That we can see, because at this point they had 51 machines in network. Sorry, this is June, the end of June 2021. They had 51 machines in network and a backlog of orders to deploy 24. As of the end of September, they had 52 in network and a backlog to deploy 28 ASRs, autonomous security robots. So that represents sort of, if you sum those together, it went from I want to say it's from 75 to 80. Sorry, I have the numbers over here, 75 to 80. So that was a bit of growth. Would that be like 7% or so? What's that? 80 over 75, 6%. It's like 7%, somewhere in that vicinity, just in the one quarter. So if they were able to maintain that momentum and actually deploy the robots, we could see growth. What's that raised to the? Oh, come on! Windows calculator won't do what I want. 1.066 raised to the fourth. That would be, if you annualize that out, that would be 29% growth, which is, I think, lower than what most of the investors are expecting to see from this company at this point in time, but does represent growth, and gives you a base that could accelerate in the future. So there was at least that amount of growth. But again, I think overall that was actually a disappointing number. And we have actually seen the reports of in the press where Bill quoted 90 machines deployed in January. And again, this is 4 months before that. So if they actually had these 52 and then made some sales along the way and deployed the majority of these 28 robots, that gets you to about that, close to that number there. So it seems plausible that they could have, that's where they're at today. But that being said, it's a little bit disappointing. And I've previously done a video on some of their announced sales that they, released a PR for. And if I looked at those, they had 12 robots worth of sales announced during this quarter, at least as I counted them up. And some of the timing might be off, so I could be, a little bit wrong, but that was what I was able to get from from the prior released information. And so that actually, now this is the first 3-month period where we've had a report, because prior to this, they were private. And so we only got these reports every 6 months. It was just too hard to actually compute some of the numbers because the period of time had passed. It was 6 months. It was just too much to deal with. But doing my best estimate of their cancellations here, it looks like they would have had, if I did the math correctly, about 7 robots worth of cancellations during this time. And so that's approximately 9% of their total deployed plus backlog number of machines. So that's actually a very, very high number. If you annualize that out, right, that would be, if you just multiply by 4, it'd be 36%. It's probably like 40% if you annualize. Well, I guess it'd be maybe lower. It's hard to say. Let's just multiply and say it's flat multiplication, 36% annual cancellations of customers, and that would be pretty bad. However, one thing that is not clear to me from their filings, they have this note right in here, that they had the impact of COVID-19, which caused some existing clients to place their contracts on hold until their businesses could safely reopen. And so what's interesting to me about that particular wording and the fact that they word their backlog of orders as a backlog of orders to deploy, this is pure speculation, and I'm not sure where this would be otherwise reported. If that would be in somewhere on their balance sheet as like an asset maybe, or liability. I don't know. The accounting is funny. And I'm, as I mentioned, not a professional, but it makes me wonder if some of those contracts that are put on hold might not be counted in the machines that are in network, and also not counted in the backlog of orders to deploy, because they're not actively, it's not actively a backlog. They're not waiting, that customer is not intending to have a robot there, but waiting for something in the process to actually get the robot there. They're actually put the contract on hold. And so I wonder if some of those, maybe about now, as it seems like the impact of COVID is gone, or let's say is lessened to the point where most businesses, I think, are opening up or back opened up at, as of this point. Again, not in 2021 and not even in too much in early Q1 of 2022, but around now. That seems to be happening across the United States, even in some of the previously hardest hit areas. And so I actually wonder if some of those will appear like will be new deployments, and will be increase that number of machines in network and increase the revenue, that they're getting at that time, but aren't actually captured in these numbers. So that's pure speculation on my part. Maybe in my next series of questions that I send to the company, I will ask them about that to see, just so that I can understand how this is reported and have an accurate picture of the company's current state. But moving on, the other big factor for the company is their gross loss. And yeah, I didn't really expect their gross loss to change very much, without significant growth. This is something that I'm watching over time, as it's sort of the part of my thesis is that the gross loss will improve and turn into a gross profit over time as they do scale and do have more robots deployed. The gross loss actually was about the same both year over year, both for the 3-month period and the 9-month period. It was worse than the 6-month period earlier in 2021. You do the math, but again, I don't actually think this is particularly significant because the company is roughly operating in the same state. I would expect this again to get better with scale, and I have a whole video talking about what I think could happen there and why I think that could happen with their their gross margins improving, and a lot of that is just predicated on scale of the company. And since there was no scale here, it's not a surprise to me that the gross loss or the gross margin stayed roughly the same. All right. Now, one interesting thing, going into a bit, more subtle notes here. Their deferred revenue was up a fair bit, and this is up to $859,000 as of September 30, 2021. And if we go back to the prior 3 months, deferred revenue was only at $318,000. So that's a pretty big increase. That's a more than doubling, and represents about what's that, $500,000, $500,000 roughly to the company. And I speculate, again, it's not exactly called out here that I could see. I'm going to read through this in more detail after I've only had a couple hours to digest this, and this was unexpected, so I don't have time set aside. But I believe that this is probably because of the Dimension funding that I made a video noting how that improves their cash flows. I would expect that this deferred revenue here is helping bolster this cash position here because of being able to pull forward that cash from that future revenue that's already under contract. So I thought that was notable to see that it's actually being used. And again, sort of if you didn't see the prior video or haven't read the filings yourself, they have a $10 million line of credit, I think, or sorry, line of credit may not be the right word. They have $10 million worth of potential borrowing from Dimension funding as they borrowing against their revenues that are under contract for the upcoming year. So that I thought was interesting to see them actually using that. And now here's maybe the most interesting piece of information here. Maybe not. They did disclose exactly how much cash they have on hand today. As of March 14th, 2022, the company's cash balance was approximately $22 million. And obviously that is after their Reg A, after the offering that there was a public listing. And they say that they project operating losses and negative cash flows approximately $1.5 million per month for the next several months. So with about $22 million on hand and $1.5 million per month of cash burn, that gets the company approximately 14 months of runway, which is similar to my prior estimates. So, that's sort of the time frame that we should be expecting them to get more money from somewhere. And I think they do have some, they'll have options if they grow. If they don't show some growth in that period, their options are going to be a lot worse, and that's going to put the company in a bad state. But that's the current state of things, is they have about 14 months of runway at their current burn rate. So another nice thing to see is we saw their sales and marketing expense drop down. You've seen this in prior filings where their marketing, their advertising specifically, was a large amount of money. And they attribute it specifically in this where is it at? I can find this is the text here, is the decrease was primarily due to the prior period, a significant increase in commercial advertising expenses that were in 2020 designed to increase public awareness of the company and its products to potential customers and investors. And so we see here that the sales and marketing for this 3 months was actually only 40% of what it was in the same 3-month period a year ago. And so that gives you some indication of where the company is actually at right now in terms of sales and marketing spend. Sort of if you subtract out some of those advertising expenses. And that was one of the things that I mentioned in the past in terms of how they can actually improve their financials, and what I expect will actually improve their with their financials going forward. All right. Couple other things to note. The G&A costs were up. They called this out due to legal and accounting. Not really surprising as they transitioned to a public company and they brought the accounting in-house rather than paying an external, paying a third party, I think. That doesn't really... Again, this is, if you expect future growth, that's not something I expect to grow, an expense to grow with revenue. It's pretty decoupled from that. So I'm not super concerned about it from a far future standpoint. Obviously, it worries me in terms of how much cash they're burning right now, but that's something that if the company can grow, it's not going to, it's probably going to stay, I'm not going to say flat, but it's probably not going to grow along with revenue. So that's, it is what it is. And another nice bit here, FedRAMP. I called this out in my upcoming potential catalyst video where I went through many things. FedRAMP is a big part of that. and they have continued, unsurprisingly, to spend money to get FedRAMP certification, and they roughly reiterated their target, targeted for end 2022, should be for the end of 2022. They missed a word there, but that was reiterated here, and that's something that I was looking for. And again, this is like the one thing that I'm unsure of is whether this statement here that says it is targeted for the end of 2022 would represent the company's views as of September 30th, 2021, or if this is as of today, as of the filing date, March 14th, 2022. My speculation is that these risks are as of today, because this is when the filing was made. This is not a prior facing statement. This is current. This is a current risk, right? This is talking about the current and future risks for the company. So I suspect that that's has a little bit more weight behind it, because we're talking now in March that they still expect FedRAMP, or they're targeting the end of 2022, which is good to see that reiterated. Now, one other bit here is I went right past. There we go. Right here. So we saw robots in progress, raw materials, robots in progress, and finished robots up. And in particular, we can see that raw materials were up by about 50% from the prior filing, from the prior 3 months. Raw materials, they had 571,000 here. They had 853,000 here worth of raw materials. The value of things that were in progress as of 3 months prior, and at the end of June 2021 was 609,000, and at the end of September 2021 was 802,000. So looks like they had more materials in hand to build and build the robots that they want to deploy, so that they can clear through that backlog. And up 50% for raw materials, up 32% for the ones in progress, if I didn't already say those percentage changes. And that was good to see that they are, actually scaling up to build the robots that they could deploy, so they could start getting more revenue. And it was a little disappointing, and I'm not sure. I don't have an explanation as to why this is, that their ASRs on lease or available for lease, right? And these will be ones that are, I guess, completely finished, but that are not used by, for demonstration or research and development, was only up by 5%. You can see here they had, about $5,200 worth of ASRs. Here they had $5,500 worth, which is a pretty modest increase. And I'm wondering if they had some, problems getting parts for some critical components, maybe during the 3 month period. Who knows? Or at some point in here. It's hard to say, but now we can actually see that they do have more materials on hand. And, maybe they were waiting on one component, and that unlocked a lot of this backlog. I don't know. Bill has made comments in the past that they did have some supply chain issues. It's hard to say, right? There's a lot of nuance in that, and they don't give us all the gory details, so to speak. But those are my general impressions, right? Overall, the big points: growth was lackluster, gross margins did not improve, and again, I think gross margin improving is predicated on growth, and since we didn't see growth, that didn't improve. And so overall, this is kind of not a whole lot of new information. I mean, just this is probably all I will ever say about it. Why did you not go to where I wanted you to go to? So if we go here to Knightscope, last I had checked, I think I haven't actually checked to see where after hours ended, but at least so far there was no big reaction. So the market didn't really have a big reaction to this filing. Again, this is pretty outdated information compared to most companies would have filed this. Would have reported this in like November, maybe December, I think. And Knightscope was not a public company at the time, publicly traded, I should say. So therefore, they didn't file at the time, and so this is a bit backdated for them. Again, certainly don't know what the regulations are. I didn't know that they were ever going to file this particular 10Q. I was expecting to see a 10K for the full year filed at best. But anyways, those are my impressions. We'll see. Maybe maybe people just didn't realize it was filed. If there's enough investors out, enough retail investors that were looking for a press release, and there's no press release. I don't know. We'll see. So, do I have anybody on the stream? Anything live chat? Nope. All right. That is all I wanted to cover today then. So thank you for watching and have a good one.